Hello, and welcome to this video on populating the sampling and high-value scoping design and evaluation form. The form is designed for documenting a single sampling application. So each time you are required to select a sample from a different population, a new instance of the form will have to be populated. The instructions guide you through that process to create a copy and paste the form, or insert a new form from the document library. Like other forms in RSM-Orb, it contains references back to the audit manual in case you are a bit unsure on how to proceed. The form also contains embedded guidance through the question mark bubbles. You can click on them and it will toggle guidance to remind you of the purpose and methods of completing certain sections of the form. So running through the form top to bottom. Objectives are there to set out key information about the population and the testing that you have planned to perform. The account name is reasonably self-explanatory, which account is being subject to sampling. I note that this may or may not be equal to a line item in the face of the financial statements, as the risk assessment may be different for different components of any given line item. So for example, we'll say we are going to populate this form for trade receivables. The account balance, or the value of the population that's subject to sampling or to high-value scoping, has to be hard-coded. So for instance, we'll say that for a particular client, this is a completely fictitious example that we're populating for illustrations only. We'll say the trade receivable balance at the end of the year was 17,650,000 currency units. I'd pre-populated a materiality of 1.1 million. So that is key information that will guide the rest of the form's sampling approach. The form prompts you to remind yourself whether there's actually a specific materiality that had been established as part of setting materiality at planning for the specific account balance or class of transactions. So the drop-down box, you can select yes or no. In this instance, we'll select no. But if you did select yes, it would prompt you to actually override the materiality that the form then uses to calculate a sample size. And again, this would be populated straight from planning. As a reminder though, when you have components, if you're in a group audit situation, this can be overridden and component materiality can be inserted here. This will make sure that the form itself calculates the appropriate sample size for the component at the component level rather than at the group level materiality. But for now, in this example, we'll say no. The next step is to identify the relevant assertions that are going to be tested through this particular instance of sampling. I note that it might not be all of the assertions that have been marked as relevant in the SARA, as different assertions might require different source populations. So for example, if in the SARA both existence and completeness had been ticked as being relevant assertions, it's unlikely that you would be able to use one sampling form for both of those assertions, because the source populations are likely to be different. So in this example, we'll just take existence or occurrence. Again, this is designed to make it easier for an audit reviewer to make sure that the assertion that has been selected is actually then what has been tested through this sampling application. The objective of the test, again, decide what it is that's being tested for. What is the objective of the test and the procedures to be performed? And the procedures to be performed would be to describe what the main procedures are that you will perform to gain assurance over the selected assertions. Typically, this can be cross-referenced to a specific working paper where the procedures are going to be described, especially if they've already been set up. That ensures efficiency and avoids inconsistent documentation between the sampling form and the actual procedures. So we might say we are aiming to test the existence of accounts receivable, customer balances, procedures as described in working paper, and then you would insert the reference. The definition of error or misstatement is really prompting you to describe what actually will count as an error in your testing. It is quite important to be specific here. Oftentimes, populating things such as, well, if a selection doesn't agree to the support is an error, that is not really specific enough. It's very vague, and it could result in some type of comment, really, if there are ever any regulatory inspections. If we do have a selection that we've tested that doesn't agree to support, but actually was able to be explained or otherwise validated. So it's important to be quite specific when describing the errors or misstatement conditions. So we would input here what specific errors or misstatement conditions would be. Then prompted to explain what the excluded error or misstatement conditions are. And again, there's some guidance embedded in the form to talk you through it. So for example, it would include the examples here. So deviations that the entity independently detected and corrected before the sampling or testing application was performed, or things that you're aware of, either because you identified it through another procedure, for example, or because you already plan then to test them differently. Other examples that come up in excluded error conditions are where foreign exchange transactions and balances result in differences just because the auditor and the client apply different foreign exchange sources. That doesn't mean that the foreign exchange rate that has been applied is incorrect, but different sources will have slightly different roundings, and that would result in a difference between the client's reported amount and the auditor's reported amount. However, that does not mean that the actual balance reported is wrong. So you might say foreign exchange amounts. Foreign exchange differences arising from different sources might not be classified as an error. Again, as a reminder, as I talk through this, these are just illustrations and may not apply to your client, so always think about the specific facts and circumstances of the particular client you work through. The form then prompts you to design the actual sampling application. So it guides you through documenting what the nature of the population is, and that is quite often populated in very simple ways, such as we are selecting a sample from an aged trade receivables listing, for example, by customer. But it can be quite useful to document in a bit more detail what actually the nature of items in the population is. So for example, you might want to include something about the quantum or the average values of items in the population, just to remind the reviewer and actually yourself as an auditor as you populate the form what it is you're actually looking at. So are there a low number of high value items? Is there a high volume of low value items? It'll help remind you of the key characteristics of your population. The source of the population is just where you have actually selected the sample from. Have you used the general ledger? Have you used a subledger, a customer database, purchase order database, a bank statement, extract? Describe where you have obtained your population from. And obviously, if you're going to subject a specific population to a sampling application, it's important to make sure that that population is actually complete. So for example, if the source is the general ledger, the value of the general ledger extract equaling the value in the trial balance might determine that the population that you've extracted from the general ledger is complete enough to perform the sampling application. Just to confirm, though, this doesn't mean that you have tested completeness as an assertion, it's just about the completeness of the underlying population. You might have done something simple as verifying that an extract of the general ledger agrees to the trial balance, but for example, if the source is purchase orders, they might have a sequential numbering system, so you might have had to do some additional testing on the population to determine that it was complete. The sampling or testing unit is very important to actually identify appropriately. For trade receivables, for example, that could be a customer balance, or it could be an invoice. It could maybe be an item in an invoice. All of those things will result in different actual sampled items in your population. So it's important to get that right. If you decide that you're testing customer balances and that is your sampling unit, for example, then the entire customer balance, if it consists of 20 invoices or 2, would have to be tested in full. There will be benefits and disadvantages of any specific sampling unit selected, so make sure that you agree with your in charge how to best proceed for your particular circumstances. The next question is important and guides the rest of the testing. Which sampling or selection method will be used to test the account and relevant assertion? Again, there's some guidance, and it guides you through key features of each particular sampling selection method. We'll go through these in turn. Starting with attribute. If we were to decide that we can test a population using attribute testing, the form prompts you to walk through the sample size determination for attributes. The benefit of this form, among others, is that it prompts you to populate the key determinants that sense check whether or not you are actually able to apply a particular sampling selection method. So in attribute sampling, for example, if we say there was a significant risk, but test of controls were not performed, and a low level of assurance, at least from substantive analytical procedures, was not obtained, it will actually not allow you to continue. It will remind you attribute sampling is not appropriate in these circumstances. However, if the attribute criteria is met, the criteria to be able to test using attribute sampling are met, it will prompt you to perform procedures and evaluate the results. It also includes references where you have to cross-link to relevant working papers to prove the answers to the questions that you've given. So the minimum sample size required for attribute testing is 50. And then there's nothing that really dictates how those 50 items are selected when using attribute sampling. A random approach would be preferred as it's systematic and drawn from a random number table. But haphazard testing as a sample selection method is also accepted under our audit manual. It is not usually recommended due to the unconscious bias that permeates any haphazard selection, but it is a permitted approach. The form then prompts you to insert a link about the sample selections and procedures that have been performed, and then actually evaluate the results. With attribute testing, if there were any errors or misstatements identified, and you say yes, it will prompt you to describe the nature and causes of misstatements, and then will prompt you to actually perform further testing. And the reason for that is that with attribute testing, if there is any errors, the sampling results do not provide sufficient evidence of the existence of a specified attribute, and the team must reassess the testing approach. However, if we were to say no, there were no errors or misstatements, then we can conclude quite easily. So, next up, if we just highlight the 369 approach, in this particular instance, it will immediately tell me that it's not permitted because it does not meet the criteria. What this is doing is that it's self-calculating whether the option is actually available, because one of the conditions for 369 applications is that the value of the account tested must be less than 3 times tolerable misstatement or performance materiality. If there were errors, you would be prompted to describe the nature of misstatements, and then further testing that may or may not be required. Next, if we decided to select a sample using high-value scoping, the first reminder is that high-value scoping is not actually a form of sampling, and it will only allow you to get comfort over the sampled items. In high-value scoping, it's important to consider any unusual items, so negative or zero balances, to test them separately. There are 2 options, really. One option would be remove the negative entries and test them separately if they're material. And that doesn't mean, for example, that if there is a reversing entry, you would eliminate half the entry. So if in a population of purchase invoices, for example, a purchase invoice had been posted and recorded as 350,000, and then it had been reversed, so then there was a credit entry for 350,000, and then the correction was 35,000, and that was correct. If you separately identified the credit of 350, you would end up actually testing potentially an item that has a nil impact on the general ledger. So it's important to just consider actually the negative entries, whether it is sensible in the particular facts and circumstances of your client to test separately. Otherwise, high-value scoping can be applied to a sum of absolute values in a population. Just a reminder. Good news is the form, like with other sampling selection methods, will actually prompt you and talk you through how to actually select a sample. So it'll say, was there a significant risk identified? And we might say yes. It'll say, were tests of controls performed? We might say yes. And what was the planned level of assurance from substantive analytical procedures? We might say none. That triggers a minimum scoping coverage requirement of 40%. And so then the form reminds you to select 40% value of the population, select specific items from the population in order of descending value until the aggregate value of the items selected as a percentage of the population reaches or exceeds the minimum scoping coverage percentage. Obviously, you can click through and insert a link to the items that you've selected and the procedures that you performed. And they'll say, were there actually any errors or misstatements? We might say that there were not. There were no errors or misstatements identified. But you'll notice that then it prompts you actually to consider what the value of the untested population is. So say the minimum balance that was required to test was 7,060,000 currency units. And because of what the items were, when we actually did our scoping, we tested 8,120,000 currency units. This means that there's an untested balance of $9.5 million, which exceeds our overall materiality balance of $1.1 million. And so the form will remind you, you have met the scoping coverage, but you must still carry out further testing of the untested balance. And that is to ensure that the sampling application can actually give you enough evidence over a transaction and a population as a whole. So the form will say, based on the nature of the errors or the substantive analytical performs, you actually have to carry out additional testing of the balance. There is guidance that reminds you of the reason for this. So we might say the way that we are going to test the remaining balance is by doing non-statistical sampling over the sample. If, on the other hand, we had said here that we had obtained a low level of planned assurance, and we had obtained a low level of assurance from substantive analytical procedures, then it would impact not so much the minimum scoping coverage, because we just said low. Say if we did moderate, it would. But if we said low, and we went through the same process again, we said there were no misstatements, but we had tested 8,120. The form, because in this specific instance we'd said that we'd actually planned to gain and had obtained a moderate level of assurance from substantive analytical procedures, no additional testing is required in that instance because the untested balance, while material, can be deemed to have been tested through other procedures. So, clearing through all these answers, if we'd said low, and again, just go back to where we were a second ago, where the form was prompting us to carry out further testing of the balance. And we'll say what we will do is we will carry out non-statistical sampling to test the remaining balance. Okay, so non-statistical sampling becomes very important. So tolerable misstatement by default is equal to performance materiality and it's self-populated. You'll see performance materiality and tolerable misstatement there are the same. It will automatically pull through from the materiality form, but do ensure that you are using the right tolerable misstatement or performance misstatement, especially if you're in a multi-entity or in a group audit situation. If you use the wrong one, the one that is too high, it could result in not testing enough, or conversely using a tolerable misstatement or performance materiality threshold that's too low would result in a higher sample size than necessary, and that would be very inefficient. So just make sure that you do check it. The account balance of the population subject to sampling self-populates. If we were initially deciding to test accounts receivable right at the start, instead of with high-value scoping, through non-statistical sampling, the account balance and population would populate as the entire value that you've hard-coded up there. Because the way we're talking through this form now is we are doing non-statistical sampling on the untested balance of procedures that have been performed using high-value scoping, it populates from the part above. So untested balance of 9.5 million, account balance of population subject to sampling is 9.5 million. Okay, so it runs you through what is the expected misstatement. So by default, that is set at 5%. It can be any value between 1 and 100% of tolerable misstatement, but if it isn't 5%, you have to add an explanation. And the way that that happens is that the form actually prompts you. So if you want to lower your expected misstatement, explain why an error other than 5% was used. If you want to make it higher, explain why that rate was used. And again, this will depend on the particular facts and circumstances at your specific client. Again, it will say, was a significant risk identified? We'll say yes. Were tests of control performed? We might say yes. Again, it prompts you to insert a link to the controls working paper. What was the planned level of assurance from substantive analytical procedures? Say none. Or for consistency with what we just said above, actually, we said low. And so then it says, well, what is actually the sample selection method that you will use? This is the auditor's choice, and we'll not give any detail about how each sample selection works in this video, but notice that it allows you to select monetary unit sampling, randomized sampling, or haphazard sampling. The benefits of different sample selection methods depend on the nature of the underlying population. Monetary unit sampling is a value-weighted selection, so it has higher odds of landing on larger values. So it is extra helpful if you've got a population that has a small number of high-value items. And random is a method of basically systematically but randomly selecting items. It removes unconscious bias, and it uses a random number generator or random number table. To get a representative sample, it is best practice to stratify the population based on, say, homogeneous monetary characteristics, for example, the average value. So for this particular illustration, we'll say we're going to use randomized method to select a sample size. The sampling interval, which is also the high value threshold, calculates automatically in the form. And the usefulness of that is that actually you have to go through the remaining population and identify what the aggregate value is of monetary items that are high value. That is described and defined if you click on the toggle guidance. So the high value items are those in a population that are greater than the sampling interval. So in our case, we might say that we had 2 items only that exceeded $574,000 in value individually. And we might say that actually the aggregate value, the sum of those 2 items, totaled 1. And the reason this is important is that high value items have to be tested separately. And so then it applies the sampling form, the formula that determines what the required sample size is. It applies that formula to the population, excluding the high value items. And so we'll see 9.5 million less the high value items equals the remaining population. So then the form tells you, okay, well, your required sample size is another 15 items. So excluding the high value items, confirm how many items you have actually tested. If you haven't actually tested 15 items, say you only tested 12, you would have to then explain why that was the case. But for argument's sake, we'll say that we did test the required. If you have used data analysis software to assist with making selections, say yes, and then it would say insert a link to that. Here we'll say no, because we just manually did the whole process, for example. Obviously, you're then prompted to perform the actual procedures on your 15 items. So select and insert a link to the procedures, and then evaluate the results. It's important to refer to guidance in the table below to make sure that we understand appropriately how to document the evaluation of misstatements. So if we were to say, yes, there were misstatements identified, you're then prompted to actually document. The nature and cause of misstatements, it is important to document in enough detail as to why they occurred and to actually think about different considerations. Always good to refer to guidance embedded in the form. It's also important then to evaluate whether there's a relationship or what the relationship is between the identified misstatement and other aspects of the audit. So does actually the fact that you identified an error change the control risk or the evaluation of the control environment? Does it actually mean that there's a likelihood of similar misstatements in other account balances? It's really important to make sure that at any point in your audit, you're always thinking about the impact of the aspect that you've tested with other parts of the audit. So then it's important, because we said that we identified some errors, to actually quantitatively assess them. So we said, okay, it will prompt you to separately consider high value items that you've tested and the rest. And that's because it will project based on these different aspects. So high value items, if we'll say the recorded value was meant to be 1.06 million, and we'll actually say the audit value for the high value items was fine. No mistakes. But the value of the sample that was selected from the other low value items, the recorded value per the client, was, we'll say, 2,540,000. When the auditor carried out some work, the actual value that was identified as being as passing was 5,480. So that means that there's a factual misstatement of 40,000. The form will automatically project that misstatement over based on the population that you've entered, meaning that there's a total misstatement that's partly factual and partly projected of 133,000. You'll note that the threshold for an acceptable sample of 122,815 is lower than performance materiality. It is not the case that as long as the projected error is less than performance materiality, the objective has been met. This is entirely based on risk. And so if you have an error such that actually the testing that you have performed means that the testing does not pass, you're prompted to select additional items for testing. So will additional items be selected for testing? I already say yes. If you say no, the form will tell you the results of this sample indicate that the sample results are insufficient to support the conclusion that it does not contain a material misstatement. So document what have you done to resolve the matter. How was inconsistent or contradictory evidence or information dealt with? Document judgments. So in this case, we'll say, no, actually, we can do more testing and we might actually get to a better conclusion. Based on the issues identified, it will prompt you to maybe reconsider the original sample design parameters. So whether there was a significant risk, we'd already said yes, so we really wouldn't change that here. Whether controls were operating effectively, whether you could change anything else in terms of substantive analytical procedure level, but we'll say no, because we'd said already we'd tested some controls and gained a low level of assurance from analytical procedures. So by this point, we have an untested population of 5.9 million. The original expected misstatement was 42,000, and at the moment we've got factual and projected misstatements of 133,000. The form will then prompt you to revise your expected misstatement. If you click the guidance, it will say why this is. Really, it should not exceed 40% of tolerable misstatement. However, it should at minimum be equal to the factual misstatement in the original sample, because if not, the expanded testing is likely to not result in a passing sample. So here we'll say, well, actually, our revised expected misstatement is going to be 150,000. So this recalculates what the minimum sample size was, which was 18. We'd already tested 15 items, so we have to select an additional 3. The sampling interval for this second sample, because we've adjusted our expected misstatement, is a lot higher than it was in the original selection. Again, we'll say we did not use data analysis software. So here, say we decide, okay, we selected another 3 items, and the other 3 items were worth $370,000. And the audit value was also $370,000. The form then says it passes. If we did have another difference, but this time it went the other way around, it continually reevaluates, okay, well, what is the total misstatement? What's the projected misstatement? And actually, does it pass or not pass? And then, conclusions. It will self-populate what the value of the misstatements were and whether or not they exceed the clearly trivial threshold. Where the total misstatement exceeds the clearly trivial threshold, which populates automatically again, describe what the journal entry number is of the adjustment that's been recorded. So you might have called it adjusting journal entry 1 or unadjusted journal entry 2 or whatever your naming convention is. Just populate here. And then you are prompted to assess whether The misstatement indicates that there's a control deficiency in the entity. If a control deficiency exists, you're prompted to add it by clicking the reportable item button. And again, this will come up with a reportable item box. We'll not talk through how to populate this in this video. There are other videos about this aspect. You're prompted to consider whether the misstatement is indicative of fraud. And we might say yes or no. And then, based on all of the considerations in the form, based on quantitative and qualitative considerations, have the test's objectives been met? Yes or no? If you say no, ultimately what you are saying is that your testing has not been acceptable. But if you say yes, that's it. You can conclude happily. If you say no, again, it just prompts you to document additional procedures that you've performed to make sure that you can get to an answer of yes. And that's it. You're then prompted to sign off. And that is how you populate your sample design and evaluation form and follow through and document the evaluation of misstatements that arise from your testing in one form. Thank you so much for your attention. We do hope you find this video helpful.